Hello, traders out there here, and welcome to our YouTube live presentation here about copy trading. My name is Frank, and I'm welcoming you here to this session. And we have today on our plan that we are looking here. You see already on the screen the copy trading here, the copy trading module that we are offering here at XM. And we are looking today for our first strategy that we potentially might invest in as well in the future. And you see that there is already quite a lot of trading strategies as well onboarded, of course. And at the moment, we are seeing here, like on the screen, any trading strategy that at the moment is ready for copying, we can oversee here. And if you see that when we are scrolling down, this is quite a lot of them. And we have to be a little bit picky in trading, right? Because we don't want to put as well our money on things that, like, let me say that is going and saying, just because I have here the biggest win, it's also the best strategy, right? Because very often in trading, it's also like this, that the biggest winnings or the biggest wins are taken with a lot of risk. And a risk measure in a trading strategy is very often as well the drawdown. So if I'm seeing as well in the copy trading strategy that I'm having a relatively high performance, but also the drawdown is relatively high, me as a trader, I have to think about if I'm able to withstand this drawdown. For example, if we are looking at this trading strategy here, actually, it has an incredible 212% return within 1 month. But if you're looking a little bit deeper into the trading strategies, that you can make a deep dive exactly by pressing on the strategies how I shown it right now, and you're going to the risk profile. There you can recognize that also the trading strategy has very often like a relatively high risk actually. So we are getting here an average profit per trade, average losing per trade. That looks really, really great. But we're seeing here a maximum drawdown of the strategy of the account was going 71.26%. That means 3 quarters of the money that we had on the account was at risk at this moment. Potentially, it was just a relative drawdown, so it never was completed, never was closed in the trading history, the trades. But at the end of the day, this is exactly that it could happen, that we never know exactly when a trading strategy is turning around. This is always the thing that we have to really keep in mind. And what we are looking for is a strategy that is making money, but a drawdown is also under control. I think a drawdown of 70% is pretty much out of control, and I wouldn't necessarily be willing to go into a strategy like that. Of course, if we are looking again for sometimes for a little bit of high risk, high reward, because this guy here makes a really nice reward, honestly speaking. And when you see the minimum investment is set here on $300, well, when we are ready to lose the $300 in relation to a big reward, why not? Why not? Always keep in mind still as well to look a little bit about the percentage fees that you have to pay, because this is also a very important factor, I have to say, risk. And then as well, when we are winning, um, we also would like to be sure that, of course, the person who trades should be rewarded because he or she is doing the great work, that we are making money. But on the other hand, we also would like to that it stays as much as possible on our account. And I think 20% for me sounds like on the first moment not too crazy. But when I'm thinking about it, it's a fifth of the profits that we are generating with the capital I'm investing actually. That's pretty much, honestly. That's pretty a lot, right? It's when we're thinking about we are investing, let's do quickly the math here, and we are investing like here, let me say 300 is the investment, then we made 213%, 200, and how much was the performance now? Let me quickly check back here. 212% in the last 30 days. So then we would make times 2.12, we would make $336, and $336 divided by 5, or times 0.2. Yeah, so then $67 of the $336 I would need to pay as a provision, as a commission, not to XM, no, to the trader who did the performance. That's absolutely okay. I mean, when he makes this performance every here and then, that's perfect. But when you're looking about all time, we had here exactly this break in of the performance quite a bit, and then we recovered as well pretty well. So you see, this is a small winners to the upside, and then here and there we're coming and getting some drawdowns as well. That's actually a 3 months performance, which is absolutely positive. That's a great strategy. But this strategy at this very moment, I would not consider too much, because I would like to find something that has less of a drawdown, and maybe as well less of a percentage fee at this very moment. So then the big question that we're coming up is, okay, but how to select the strategy then? If we're not going only for performance, well, we can filter it. For example, we can say the risk we keep on here, well, let's keep the risk on 10, but the fees, they should be maybe not more than 10%, and the minimum investment should be at around like the same, right, at 350 percentage points. And then we are going for a trading frequency. We would like to have a medium trading frequency. And honestly, it could be a human, it could be an algo, or it could be a supervised algo. This I'm not, I don't mind too much, honestly speaking. And then we could go ahead and let ourselves filter and see, okay, we don't find anything at this very moment which is like this fitting this criteria. Probably it's because it's a strategy that is not. Let me find something out here. Maybe take this here off. Fees 10%, risk score, and we take this here also off the filter here, so that we get something to select from. And then we're seeing that here we're seeing like 10% fees, win ratio 27.5, drawdown 34. Um, the return here is 113%, 206%. Here we see even a lesser drawdown. If we're going from a drawdown perspective, first of all, we could here already pick something. But then you see, okay, it's still too mixed as well. But maybe we are deleting this filter and we don't find anything. But what looks pretty interesting for sure is here the Nasdaq switch, right? The Nasdaq switch looks pretty interesting. 19% drawdown is not little, but it's still standable. It's like it's still standable. Here we have something that is very low on a drawdown, but you see as well the return on a monthly base is as well like it's good. It's very good, 17%, but it's much less than here. So let's look upon this strategy. This looks very interesting for me at the moment, and also from a fee perspective, looks very nice. 10% is only half of it. Let's look at the overall performance for the all time. So they started with the trading somewhere at around March timeframe, was having really a very, very nice decent growth here. The trades won 16 from 25. That looks really like decent. 64% hit rate. We had the best trade 446, the worst trade 228. It looks also pretty much stable. So that means the risk reward looks also pretty nice. And you see here the last trades the person was doing, and it's only focusing on NASDAQ and having a little bit of euro still inside as well. But what I like very much, that this trader seems to be pretty much like focusing on only a few markets. That means there's not so much diversification. That means it could be an expert on the NASDAQ, it could be an expert on the euro US dollar. And from that perspective, it looks, in my opinion, pretty solid. And if I'm looking at all the trades that were closed, then I see that he keeps the losers relatively small and tries to let the winners run, actually, right? And that looks for me very solid in this very moment. I have to say, of course, 25 trades is not so much yet. So we could have here a little bit of um, um, more data actually to validate if the strategy really performs that good also over time, if we are talking about 100 trades and so on. But I like it already pretty much. It's an algorithm. Yeah, it's algorithmic trading, but its algorithm is going in direction of taking care about the right parameters, honestly, right? You see here flat basis, flat, 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 and then you start seeing big wins. Flat, a little bit of drawdown, big wins, a little bit of drawdown, smaller winner, and we're staying flat as well. So it seems like that trading frequency, I mean, in the March time frame, and now in April with 25 trades, it's pretty much solid. It's pretty much okay what we want to look for. We might have found an expert that is taking care of like one or two markets, trades algorithmic, and the algorithmic is focusing on having the drawdown in control, looking about as well to take out um, and take out actually um, and take out the yeah take out a risk of getting big losses actually. Yeah, that's very important to talk here or to say here. And then let's look at the risk. So we had here, even in the last 15 days, the risk is even set as medium. We had still a high risk in the last 7 days, from a trading frequency perspective. And what does it tell us here? And yeah, you see that in the last that really the risk as well is pretty much in control. What I like a lot is the average profit per trade, $115, and the average loser is around $77. So we are having here a risk reward that is one point close to 2 to 1. It's 1.6, 1.4 to 1, and that's really amazing. So this is a strategy, and which really, when it works further like this is definitely at about to look at. Yeah. Then we're looking at the investors. So in the investors, they were growing as well, relatively good. So it seems like people are seeing the strategy. Meanwhile, they're getting notice of this strategy, and people are getting interested in this strategy. That looks really very, very good. And you see as well here, we are having the NASDAQ. This is the top traded instrument, is the NASDAQ. Um, it could be, and it's the future mainly, right? He trades the future. So if he trades as well overnight, for example, then we don't have actually the swap trades, honestly speak, the swap costs to carry, because in the future we don't have them. And then we have a little bit of euro US dollar still in there. Euro US dollar is actually, like, yeah, kind of few trades only so far. So this definitely is a strategy we could easily go for, and this is something what we should keep an eye on as well. So we are remembering the strategy by just putting it, to our favorite watch list, and then we can go back and look as well if we maybe still mix now a commodity strategy into the index strategy, and then we are still looking for a trading strategy that is for the forex. So here we have like um, trading strategies that are going on the commodities, but here we don't have too much yet. And here is a gold killer strategy. This I would be interested in right now, but the fees 20% is again out of my ballpark. So we are having here 15%, and this maybe could be also interesting here. Go and goal, is it like here with 15%, six investors so far, invested money is relatively high. Own funds are relatively high as well. So that means that could be a solid one. He might be taking definitely care of as well the drawdown, whereas 50% is really a lot as well. But let's look at it. Look at the overall performance since this money is here invested. We click again on the strategy, and you see that in the last days, it was getting a little bit more problematic. But since the beginning of, like, let me say March, we're seeing quite a solid performance, growing quite nicely. But now we see a little bit going into drawdown. at this very moment, right? So we are having we have a minimum investment of 1,000 in this strategy. Yeah, that's important to remember as well.